Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Wednesday, August 28th, 2019, and this is the Daily Report for gold and silver. Interesting action in the precious metals, a lot of it really overshadowed by dollar strength. That accounted for more than 100% of the decline, fractional decline, I should say, in gold today. But silver was able to manage out a very, very solid gain as it continues to outperform gold in terms of percentage gains on a daily or weekly basis. Dollar is back above 98, and U.S. equities were strong today. Let's take a look at current pricing in the precious metals. Gold did decline by about $3.20 with December futures at $1548.60. However, if this was entirely due to dollar strength, we'll illustrate that in a moment. Platinum did trade higher on the day and actually gained a resounding 4.28%, $37. It's back over 900 at 905.40. Palladium lost about a full percentage point in trading today, almost $15, $1463.60, and silver scored an extremely impressive gain and broke through a critical area in terms of potential resistance today, and we'll cover that when we pull up our charts. Silver gained 16 cents in trading, $18.31.5. Let's take a look at our charts. The first chart that I do want to look at today is a standard candlestick chart, this of weekly gold futures, the continuous contract. It is currently basis the December contract month. When we look at the week itself, although we still have a couple of days left, we can see that we are still in the green, meaning that current pricing is above the opening on Monday, but ever so slightly. We would almost label this a doji. But traders, we still have 2 days remaining in trading, and we know from past experience, especially over the last couple of weeks, that we could see a significant difference in how the weekly candlestick looks once the week concludes. However, when we convert our candlestick into a Heikin-Ashi or a Japanese average chart, we can see a significant difference. Realize that the primary difference between a Japanese average chart and standard candlestick is how the open is fixed. Because in a Japanese average chart, the opening price always comes in at the midpoint of the prior candle. And therefore, when we look at this week through the eyes of an average chart, what we can do is try to determine strength of trend. And on a weekly basis, we have still got solid upside performance. The bullish trend that has been evident for the last 4 weeks, we can see that there was an absence of lower wicks. That is significant. And there has been pretty solid body size. Now, the body size has been diminishing a little bit, and these 2 weeks look almost equal. What this tells us is that on a long-term basis, the bullish momentum, the trend itself, is still relatively strong. However, when we convert our weekly Japanese average into a daily Japanese average, we can see that the last couple of days we have seen a defined loss of momentum, which is clear when we compare the body size over the last 3 days. Now, the fact that even these daily candles still have an absence of lower wick is significant, but also the contraction in terms of body range also tells us that on a short-term basis, we have hit either a period of consolidation and a base forming at this new price level, or a potential top in the market. My recommendation is to maintain your current long position. We will look to move our stops up either tomorrow, definitely by Friday. Maintain your current stop. Lastly, I do want to take a look at silver futures because we have seen such a strong rally occur over this week. Now, this major breakout actually began on Friday of last week when we saw silver trading just above $17 per ounce, and over the last 4 trading days, we have seen it move up approximately $1 in value. That is a tremendous move. The first indication that we were going to see some sort of a breakout occurred when we broke above the 50% retracement at 1740. You can see that right here. And now we are at the next milestone, so to speak, which is the 0.38% retracement at 1831. Market is at 1831.5. So we are right at this particular level. If we see follow through in silver, our next target in terms of upside potential would have to go above 19 to $19.46. And that is the 0.23% retracement. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.